I really respect the
Federal Reserve Chairman Jerome Powell said the U.S. Central Bank can take its time when it comes to its next move on interest rates.
And I think we're actually in a good place. I think where that leaves us, particularly with inflation low and under control, is we have the ability to be patient and watch patiently and carefully as we see the economy evolve and figure out which of these two narratives is going to be the story of 2019.
But Powell, who spoke at the Economic Club of Washington, also downplayed predictions suggesting 2 rate hikes this year. But he said the Fed will shed significantly more assets. Redmount Capital Partners Chief Investment Officer Vincent Catalano.
Well, I think that Wall Street is looking for a couple of signals from him. Some of the obvious ones are what will be the Fed's policy in terms of interest rates, et cetera, their balance sheet, so on and so forth. But the other item is whether or not Powell is going to capitulate to the pressure from Donald Trump. And if he shows signs of doing that, I think that the markets would initially feel positively towards that because it means, they're not going to be tightening and things of that sort. But the implication of the loss of Fed independence is something that is kind of problematic and would show itself in the market ultimately.
Market reaction to Powell's comments was fairly muted. The S&P 500 fell slightly during his speech, and 10-year Treasury yields hit a session high, reflecting investors' sensitivity to any hint about the Fed's $4 trillion bond portfolio.